What's going on, guys? Ace Alfala, CEO and founder of FMO Media. I'm over here with Taylor from Landmark Mortgage out of Florida, kicking butt and taking names over there. So we wanted to have him on today's show, really just to learn a little bit about him and his company and what he's doing out there in the Florida and soon to be other parts of America as well. So Taylor, welcome to the show. And why don't you just quickly introduce yourself for people who don't know who you are and what Landmark about?
Yes, as you said, I'm Taylor Caffey, and we are licensed in the state of Florida as Landmark Mortgage and Associates Incorporated. We've been here since 1999. Previous to that, I was involved in another partnership for 4 years, and then prior to that, just as an introductory broker for 2 years. So my feet are wet, for the lack of better words. We are specifically in Lakeland, Florida. That's where our office is. However, we're closing loans all throughout Florida, primarily in the Central Florida area, Orlando, Tampa, Lakeland. Yes, we go down to Marathon and the Keys and to Miami occasionally, just closed a few in Miami. Doing well. We pretty much specialize in all your conforming products. Fannie Mae, Freddie Mac products, conventional loans, FHA loans, VA loans, USDA loans. We are one of the few lenders in town in Central Florida, independent lenders that do manufactured construction to permanent financing, which for those that don't know, it's the placing of a manufactured home unit on a piece of land. They dig the well, they set it up to plumbing, they set it up to electric, they pour driveways, they add back porches, that kind of stuff. And we fund the process of that construction phase from placing the home on the lot and doing everything else to the end. So we specialize in that. We also do manufactured homes, FHA, VA, and conventional manufactured homes. We're finding now in the state of Florida, because our wages have not caught up with the market, the housing market. A lot of people are going to the manufactured home market. Now, that's not all that we do. We do the standard. I just closed $1 million property here locally a couple of weeks ago. So we are doing the bigger loans, but for those that may not qualify for a $350,000, $400,000 home, we can still do the smaller homes also.
Awesome. Thank you for the introduction, Taylor. Yeah, and I got a lot of follow-up questions because you covered a lot right there. Why don't we just start with the state of Florida, right? That's your bread and butter. You kind of know it in and out. What is, what would you say as far as your market? Where do you believe the Florida market's going, right? I know you have a lot of people coming from all over moving to Florida for tax purposes and all types of reasons. It's also the real estate market's nuts. If you had to kind of just sum up, where Florida's been over the last 24 months to where you think it's going, big changes, not many changes. What do you foresee in the market right now?
Huge changes. Unfortunately, we've been kind of that proverbial frog in the pot of water where you turn the heat up and it gets hotter and it gets hotter and it gets hotter and you realize it's too late. You can't get out of it. Florida has been growing at such a pace that people haven't really realized it. Now we're at the point of no return. I mean, you've got some people are calling Florida the new and next California, where you've got properties in California. You've got people with professional jobs that are still renting. The values of our homes are increasing. Now, I did hear just recently that values in the Orlando area, we're seeing some of those prices drop. Now, whether that be it's overpriced to begin with, or maybe people are stepping back going, hey, let's see if this is really what we want to do and put our money into. The values, I believe, are dropping a little bit. Are they going to drop a lot? I don't personally think so. Interest rates is the other hot topic. What are they going to do? If I had a crystal ball, I could tell you exactly. But the word is that the Fed keeps talking about raising the rates to bring inflation into check. So rising interest rates is one of their tactics of doing that, whether they know what they're doing or not. So there is word that they're going to raise rates. Now, keep in mind, the public needs to understand when they raise rates, there are multiple different kind of rates. So one rate may not affect long-term mortgage rates. Sometimes it may just affect what they lend for cars and for credit cards from the banks. But that's what we're seeing, regardless of interest rate, whether it be for a home or a car. The perspective is that rates are going to continue to go up at least a little bit more. So currently, you're probably looking at a rate of around 4.99 APR, maybe 4.75 APR. They're looking at taking them up to maybe another 0.5% to 0.75% in the near future if things don't slow down in terms of the inflation, which I think we're headed in the right direction. There may be a lull in the market, but eventually we'll get back to the way things were.
And are you seeing a shift versus the new construction market versus the home resale market at all, like in your area, or what's the percentage of like buyers, right, to sellers in that ratio? Like, what would you say? Is there any changes? Is it kind of just we can't build enough because everybody's still buying and they can't keep up with demand, or has that changed at all in the Florida market?
Spoke to a realtor just last week where typically our community, just this little community of Lakeland, Florida, normally has in a normal market anywhere from 1,000 to 1,200 listings at a time. I was told last week there were 250. So you can see what the average consumer has to deal with. They're having to deal with multiple offers on a property. So if you're not coming in at your highest and best, and even in some situations, waiving any appraisal contingencies within reason, within a maximum cap. Let's say if the appraisal came in 20 grand low, the borrower says, hey, I'll buy this property as long as it doesn't come in more than $20,000 lower than what I'm offering. And they'll go ahead and buy that property. So those are the things that we're having to deal with in this market in terms of housing. Now, new construction still going, but their prices are going at the same speed in terms of rising as the existing market, the existing housing market. Okay, so those prices are rising at the same speed. So housing market, because there's few on the market, the builders are taking advantage of that. And they've been doing this for a good 2-3 years. They've had it great over the last 2-3 years because their prices and the demand for a new house has been greater because of the lack of inventory in the existing market.
And what do you see a shift at all? Maybe not for the time being. If I'm a potential buyer right now and I see the shift in the market, I mean, any words of wisdom or advice for someone who is saying, well, do I wait? Do I wait and see how high the interest rates go? Do I buy now? What's the advice you would give, both on your end? Like what do you see? What's the advice you're telling your kids?
And again, what I would say is, what I'm hearing is that we're not going to go back to the place we were in January of this year and previous in terms of low interest rates, lower valued homes. We're just not really going to go there. I'm sure it could happen, but it's not expected. If I was advising my children or a friend whether or not they should buy, I typically tell them now's as good a time as any. You look at a rate of 4.75 or 5%, and you hear people go, "Oh my goodness, that's high." Well, it's only high because of what we've come from. High is back when I was a kid, when Jimmy Carter was the president, at 18% in terms of long-term mortgage rates, and even after him, when we were looking at 8, 9, and 10% rates after the Carter administration, we are still looking at a favorable market when it comes to interest rates. In terms of the prices of homes, you're in Florida, you've got people from New York, Michigan, California, those states that have been shut down, that have been restricted in terms of what they can and cannot do. Those people are fed up. And they're moving to Florida. They're moving to Texas because we're wide open. And they come down here and they live in New York City and they go, wow, here I've got a 1,500 square foot flat or house up in upstate New York that's running, $500,000, I can buy a 2,500 square foot home down in Florida for the same price. And they come down and buy cash. The days of the seller paying the closing cost, we haven't seen those in a while. Back in the day, 2-3 years ago, virtually every transaction you could make an offer and ask the seller to pay $5,000, $6,000 worth of buyer's closing cost. Today, because you have multiple offers on the limited inventory that we have, the highest and best is going to get that transaction. And 9.5 times out of 10, it's going to be somebody with money that can pay their own closing costs and that can give at least the full price that's being asked. So back to your original question, is now the time to buy? Absolutely, now's the time to buy. Rates are still low. If you put it into perspective, rates are still low and houses are not expected to depreciate that much, not in the state of Florida.
Yeah, you hit it right on the head, Taylor, because I don't think enough people are looking at what if rates do just keep going up, right? Because now is the best time to buy, right? So that makes a lot of sense. Taylor, how'd you get into the mortgage industry? I mean, I feel like most people don't grow up saying like, I know what I'm doing when I grow up, you crunching numbers and giving out loans, So how'd you end up in the industry? Were you always a math guy? Like, did someone influence you? Like, walk me through it.
You know what? I say this tongue in cheek. I'm a redneck from Alabama. Okay. And I met a wonderful woman that lived in Florida, and I moved down to Florida after we graduated college and started a career and got laid off. And another mortgage company owner who was a friend of mine extended an opportunity, and I started working for them. I was with them for 2.5 to 3 years and then went out on my own with another partner. That partnership dissolved in 1999, and I started Landmark Mortgage in 1999, and we've been going strong ever since. Last year was our best year ever financially, and we're already seeing a little lull in the market. This has happened before. You always get worried, you always get concerned, but I've used the term, we've never seen this. This is unprecedented. I've used that term before, and I've heard people use it currently. But it's just a season. People are always going to buy. They have to get it in their head that, hey, we're past that market that we were in where the low rates and the housing being cheap. Now we're back to reality. Now's as good as time as any to buy. And
starting your company, I mean, what would you say? Because I'm sure there's other people in the area, right? Why use Landmark? What's the differentiator that you would say was the difference with Landmark compared to other, mortgage brokerages out there?
Landmark is a licensed mortgage lender. We are not a broker. We do everything from originate loans to process those loans. We submit them to underwriting. We obtain what we call a clear to close, or a promise to purchase, if you want to call it that. We prepare the documents for closing, and we fund the loans for closing. We do everything in the process but underwrite the file. We have someone else underwrite it because we want to guarantee that loan will be purchased on the secondary market. Okay, that's how we do business. The reason why we do that business is we have our hands in more of the process. Therefore, we control when the documents get to closing. We control when the money gets to the title company to fund the transaction. You have horror stories from realtors out there of them sitting at the closing table from noon until 4 o'clock in the afternoon waiting on money. You never have that problem with us. The other reason why you want to use Landmark is we have a plethora of programs. Even though they are considered conforming programs, and yes, we do some non-conforming, non-QM is what we call it in the business, a non-qualified loan. But we do a lot. Most is what we do is the qualified mortgage. With those programs, we have programs within programs where you can take that credit score down to 580, down to 560. Now, understand, with those rates as low as they are, the moons have to be in alignment for them to work, because there has to be certain things that the borrower has accomplished over the last 12 months, although their score is low, to be able to qualify for that loan. It's called manual underwriting. A lot of people don't do that anymore, where a human takes the file, they have a set of criteria, and they make the decision manually. It's not done on a computer engine. Okay. We do a lot of that. We do like the bread and butter, the vanilla loans where you've got the 780 credit scores, the 700 FHA scores, people with plenty of money in the bank. However, we work with down payment assistance programs. We do the low down, no down programs. USDA is no money down. FHA is 3.5% down. You've got the Fannie Mae Home Possible, Home Ready programs, which is 3% down. And if your income falls below a certain level, you can qualify for discounted mortgage insurance. So really, in terms of using Landmark, you have all products available to you, from a jumbo loan to a no money down loan.
That's awesome. Let's unpack that a little bit more, Taylor, because if I'm someone maybe just watching this for the first time or just super uneducated with everything in real estate, how the loans work, what's the most popular loan right now being given out? If I'm someone watching this and saying, like, can I even qualify? I need a letter of intent. Like, can I even qualify? It's like, do I even reach out? Right? Because you can't even get in the door right now without an LOI some places, right? So before I call you, what am I saying? Like, because I feel there may be a lot of people out there that don't know they can qualify for a home, but they can't because they haven't tried. So yeah, give me some insight on that and unpack that, maybe the details of what the average person may need.
The first thing that a potential buyer needs to do is the popular way of going about buying a house is calling the realtor first. Nothing against a realtor, but they're not the one that knows specifically the guidelines for the mortgage product. 99% of realtors want the borrower to pick up the phone and call a preferred lender, call Landmark Mortgage, and become pre-qualified. What we do is we question, and another forte that we feel like we do that maybe others don't, is I don't have a little 5-minute conversation with a potential buyer. I have a 20 to 30 to 35-minute conversation to try to listen to them, find out where they are. I'm going to quiz them regarding, okay, number one, what's your credit score? Number two, how much money have you saved up to put down for closing costs and your down payment? As I gather this information, I am conjuring up what is the best program for them. And then I'm going to share that program and others with them so that they can make the best educated decision for themselves. But they need to get pre-qualified first. If you've got lower credit scores, I'm immediately going to most likely go to an FHA loan. They are the most liberal of all guidelines. The Federal Housing Administration, 3.5% down. Okay. If you're a veteran, of course, I'm going to do a VA loan. But VA loans are a little more strict in terms of underwriting than FHA would be. But if you're a veteran, no money down. USDA is basically conforming guidelines or like a conventional loan, but you can't make too much money for the program and you got to buy in a certain area. So one of those questions are, where are you looking to buy your home? So as we unfold all the material of what the borrower is thinking and what their expectations are and what kind of property they're looking for, we're hearing that need and trying to put them in that program that fits them perfectly.
That's a great answer, Taylor. That's a great answer. Being biased, obviously, I know we're your marketing company, but let's turn it to marketing. I mean, how have you seen social media, right, just change the mortgage industry quite a bit? Like from you've been doing it for quite a bit, right? Before social media was even a thing. Why don't you give us some insight on how important it is today and kind of where it was to where it is now?
Well, I've done radio, I've done television, I've done print, I've done all of that through newspapers. You got to understand, I'm kind of one of the old guys in the business. I've been doing this since 94 is when I originally started in the mortgage business. Back then, I used to send out a little flyer called Tips from Taylor. And I was this little rookie loan officer, didn't know much, but it was just a way to get my name out there. And I guess over time, because social media wasn't available at the time by doing little things like that. That's all we had. So apparently it worked. Social media, I will admit that I am not that savvy. That's why I have you guys do that kind of stuff for me. I've been talking with your staff earlier today, putting together a few things. And again, the key is that people know that Landmark is here for the long haul. And it's proven in our history from 1994 through today. I mean, you're talking a long time in the mortgage business. So going through the ups and the downs, the guideline changes, the forum changes, the government rulings, we have survived all of that. And yes, we all hate change, but you have to do it if you want to continue to do this. So when it comes to social media, I'm gonna be honest. I'm a neophyte. I think I was telling your people what's the name of a Padawan in the Star Wars business? A trainee, a Jedi trainee. That's what I am, a Padawan when it comes to social media. But I have found that is the best way to get your branding out and to get your message out.
100%. Love the answer. The Padawan. I love it. So, and wrapping up, I guess, because I know we're coming at 30 minutes or what last piece of advice would you have for, either A, someone in the market, or B, maybe somebody even thinking about getting into the mortgage industry right now, as far as maybe a quick tip, trick, anything, just last piece of advice you have for everyone.
Well, all I can say is, I even have, I've had loan officers that have worked for me in the past, and they have a good month, and then you seem to not see them as much the next month. And then they come back the next month kind of crying they don't have anything in the pipeline. With that said, nothing comes without hard work. If you're not someone that's willing to do the hard work, to put the time in. I got a buddy of mine that's an investment banker. He started out his business literally calling 100 leads per day. His partner would call about 5 to 10. And after he got 5 to 10 rejections, he said, I'm going to play golf. I'm out of here. But this guy, he called 100 people a day. And now he's got a thriving, successful financial business. Same thing in the mortgage business. You got to dig. You got to work hard, and you got to put your plan and your strategy together. First and foremost, you got to pass the test, which is not an easy test. I don't want to discourage anyone, but it takes typically a minimum of 2 times to pass that test. Very law intensive. And then second of all, you need to get under a company that is willing to not cradle you, but hold your hand through the initiation stage and learning the process, learning the application, and learning the different products and how to pre-qualify somebody effectively. Your last deal, your next deal is only going to come if your last deal was good. So you're only as good as your last deal in this business, so you can't make mistakes. You got to ask all the pertinent questions and get all the data so that deal, you tell a realtor that deal is approved and ready to close, it better close.
And that's just good business, right? So they send you more business.
There you go.
Got to keep that pipeline full at all times, 100%. Taylor, thanks for being on, buddy. Until next time, everybody, click the links below. And please follow Landmark Mortgage and Associates to get more information from Taylor and to work with his team. And we'll see you guys on the next one.